All right. Today was another very bullish day, confirming the sector rotation that I've been telling you about. And back here in late June and early July, I drew this arrow on the small caps, and this is the IWM ETF. And I told you in Q3, I was looking for a very powerful push up here towards the 220s, specifically speaking, the price target at 228. And as of today's close, we are now only 1.64% away from that price target. And as you can tell, this was a very impulsive move and it was very parabolic. And we were all over this move in the Discord server, loading up with the low risk entries. And if you remember back just 5 days ago, I did a video called Extreme Bull Rally. And a lot of people were doubting the possibility that we could have such a strong bull rally in this market after everything that's already been running. But a lot of the reason why this extreme bull rally was possible is because we had very narrow market breadth, and a lot of the stocks that were moving the market higher were those Magnificent 7 tech stocks. And those stocks were paving the way and leading a path for the rest of the market to follow. And you could see how quickly that gap or that divergence in performance is closing with this very powerful push higher in IWM. And then of course the other sectors that I've been talking about as well. So this is the benefit of being an objective price action trader, is a lot of this was broadcasted on the chart when we had this bull breakout. I specifically told you there would be bulls that are just now getting this on their radar. And because of that, there was a good chance this momentum was going to continue towards the price target. And while we can never know exactly how fast things are going to move, I did tell you because there was such high volume, there was the chance we just went straight up with no pullbacks. And that is the dangerous part about waiting for pullbacks when you're getting high volume buying on a bull breakout after multiple weeks of consolidation. And don't forget, I told you about this giant inverse head and shoulders that was just starting to break the neckline. So when the stars are aligning and the chart is screaming in your face, it's time to jump on the bull. You can see that sometimes you just have to jump on the bull and manage risk along the way, because things can and often do move very quickly when we're talking about multi-week or multi-month consolidation bull breakouts. So once more, this is a rally a lot of retailers likely missed, and I sure hope no retailers were trying to short that thing, because that is a bullish freight train. And if you did try to short it, it ran right over you. Now, I don't even think this rally is over. It is definitely looking parabolic and overextended, but as I told you, I do think we're going even higher. So there is the possibility we just go straight there and don't look back. So on IWM, you can now stay bullish above 220 or 223, so you can up your risk levels. And if you're not in this, it is getting more and more risky to buy up here, but as long as you manage your risk, you can do whatever you want. You could buy at any point in the market. You control your risk with position size and where you're going to set stop losses. So look for IWM to continue to push higher. We're continuing to get very high volume, even though a lot of that is bears getting squeezed out. This is still a very bullish configuration, and we haven't yet hit the price target. Next up is the Dow Jones, which I also told you was a very bullish sector, and we were getting lots of bullish buying volume. And I don't even think this move is done. I'm having to up my price target yet again because there are still bears trying to short this thing. And with the bull breakout, we are likely going to continue to push higher. So above 407, I now have to up my price target even higher, which is going to mean if we get a pullback towards 407, that's a buying opportunity on our way higher towards 415. We are likely going straight there, so don't expect the pullback, but we could cool down just a bit before we go higher. But every single bear that is trying to short the Dow Jones needs to capitulate before we're going to reach a top, which means we are still going higher in the Dow Jones. So stay bull above 407, that's your risk level in the Dow Jones, and we are moving that risk level up as we go higher, so continue to follow price action along the way. The next thing I told you to pay attention to was Berkshire Hathaway. And on Berkshire Hathaway, I was talking about this multi-month consolidation breakout, and this is 5 months of consolidating, and we were just starting to break out above 420. And as you can tell, Berkshire Hathaway is still on a rocket, still going higher, and still looking very impulsive. So every single thing that I've been talking about with sector rotation and all of the stocks and sectors and ETFs I've been talking about are starting to confirm all of the theories that I had. And if you've been trading these, you should be absolutely crushing this market, because you noticed today that big tech was going much of nowhere, while all of these other sectors and stocks that I gave you were on absolute rocket rides. So Berkshire Hathaway was looking great. XLF, which is the financial sector, was the other one that I gave you, and I told you above 43, it was likely going to 43.5, and that is exactly where we hit today. So once more, we are just slamming through price targets straight up on rocket rides with no pullbacks and no looking back. And again, this was the very bullish daily inverse head and shoulder that I told you we were likely going higher. And if we got any dips, it was a buy the dip, but you did not need to expect any dips because there was this possibility we just went straight there. And as you can tell, we just went straight there. So I had XLF. The other one I had was XLI. And I told you on XLI, we had this double bottom breakout as long as we were above the neckline at 123. And as you can tell today, XLI was up nearly 2.5% and slammed out to that brand new all-time high price target I was telling you about. And here I was telling you we were looking for a price target of at least 130, but now it looks like we're going even higher. And again, all of this is happening on extremely high volume. So you could have fell for so many bearish narratives and you could have listened to so many bears telling you the market wouldn't go higher and it couldn't go higher. But here I was screaming in your face and pounding the table that we were about to have extreme bull rallies, even though it wasn't going to be where you thought it was, because a lot of you are just focused on those tech stocks. If you were trading tech stocks today, you probably thought today was bearish because a lot of them were going lower. Meanwhile, every single trade that I've been putting you on is breaking out and going parabolic and on absolute rocket rides. That is why it's very important to understand how the market works and not just get caught up in one sector. This was broadcasted from a mile away, and that's how we were able to capitalize on it, and that's how I was able to call it out before it happened. So really quickly, we'll look at SPY, and on SPY, we did hit that price target that we've been talking about at 564, and we did close above it. So it's possible now we just continue to push higher towards 569, and the risk level here now is 561, and if we break 561, we're going to 556, and if we break 556, that's going to be the sign to get risk off. So SPY still looks risk on. We're still in a very powerful bull trend, and SPY is well diversified. Even though it is the majority of the tech sector, it is still benefiting from the financials and the industrials as well. So SPY looks good here. You can stay on that bull, but when we go over to the NASDAQ 100, looking at the triple Qs, you can see we only went up 0.04% today. So on a day the NASDAQ 100 went absolutely nowhere, we were getting over 2 to 3% moves in those other stocks and those other sectors and those other indices. Now, this is still a bull trend above 491, so I can't deny the fact that it can continue to go higher. I'm simply telling you this is not where you're looking for the best performance right now in the market. It's in those other sectors and those other indices. Now that we've had a lot of this rotation, that theme could be coming to an end very quickly now because things are moving very fast. But the point of the matter is it already played out and it worked very well. And if at any point the triple Qs break down below 491, that is immediately a sign to get risk off, and then you'll be looking for supports right around 485 and 478. If we continue higher, we have that resistance at 503 and then brand new all-time highs at 507 and 511. If we look at the VIX, we were only up 0.53% today, and the VIX is still very low relatively speaking, but if at any point the VIX does spike and gets out above 15, that should bring in some panic selling. But again, with so many bears trying to short these new bull breakouts, it is very unlikely this market is fearful. It is likely going to continue ripping faces off and short squeezing the bears out. Another very important chart to pay attention to is Bitcoin, which is breaking through 64,000. And I told you it was looking like we reversed the downtrend, so there's no reason to be bearish on it. And you can now up your risk level to the breakout at 63,000 or continue to use the risk levels at 60,000 and 58,000. This is bullish on high volume breaking out, so it is possible this is a brand new bull trend starting, which could be taking us higher towards 75,000. I'm not putting a limit on how high anything can go. If it's in a bull trend, you should be riding the wave and staying with the direction of the trend. And then one more sector we haven't been looking at, but again, I want you to see the whole picture here, is the healthcare sector, which is also up 1.43% today, also breaking out to brand new all-time highs and also looking like it could be starting another very powerful bull trend. Again, all of this is happening on multi-month consolidation breakouts, and again, it looks like we have a giant inverse head and shoulders with higher lows and higher highs. So it's very important you understand this market is extremely bullish. And as I told you in that episode called Extreme Bull Rally, I do not care to explain how or why this is the case. As a technical analyst reading the chart, I told you it was coming, and here it is. Don't ask me to explain the reasoning or explain if it makes sense, because I don't care to do that. The chart is always right, which means the market is always right, and it's our job as traders to ride the wave in the direction of what the chart is telling us to do, and the chart is still telling us to stay bullish in a bull market. So remember that theme as you continue to trade, because if you start to get a bias in this market and you start to think we're near a top and we we can't go higher, you are going to continue to get left in the dust, or even worse, if you're shorting it, you're going to continue to lose money in one of the most powerful bull markets we've ever had. So it is a bull trend until it's not. Keep in mind that video I made about the bubble and how high bubbles can go before they finally pop. It doesn't matter if it makes sense. It does not have to be rational. This is a market and there's a lot of liquidity pumping into this market. And if you are fighting the trend, you are going to get destroyed. And that is not how you trade. You wait until the chart confirms the bull trend is rolling over and getting ready to die. You don't try to call it top. So remember, we are absolutely crushing this market, and I have proved to you with all of the video updates that I've been doing that we saw this coming from a mile away, so nobody can deny it. There is factual evidence from the videos that I've made days ago before all of these rallies happened that I called it exactly how it played out. And I told you exactly where to be watching, and I told you exactly where to be positioned before it happened. So you cannot deny the track record, and you cannot deny that I warned you before it happened. And that is why we are absolutely crushing this market. So if you want to come crush this market with us, and you want to be part of the team that is absolutely destroying this market day after day and continuing to win and get in those best risk reward setups with the best probability to win, that is in my Stocks Channel Discord server, where you'll get access to all of my trade ideas, all of my technical analysis, and all of my intraday updates. You can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.